Well, despite the recent pullback in the past 6 months, we've seen markets rallying to record levels as well. Our next guest thinks this rally will continue into the end of the year, despite that little turn we've seen lately. Let's bring in Jamie Murray. He is the president of the Murray Wealth Group. Jamie, thanks very much for joining us.
Thanks for having me on.
Okay, what gives you the optimism right now?
Yeah, so I really think there's three things that we're looking to see move the markets higher into the last quarter here. I mean, first off, we're seeing record stimulus around the world. We're seeing obviously big U.S. fiscal policy in terms of tax cuts, depreciation, acceleration, huge capital spending out of some of these companies that's being driven by both the AI trade and these tax breaks and the reshoring efforts in the U.S. We're also seeing this more broadly around the world. Canada looks like we're going to get a big deficit coming up in the budget this fall. The EU and even Japan is on a fiscal expansionary policy. So we think, that's one source of liquidity for the markets and for the economy. And then, secondly, on the monetary side, we're seeing interest rates come down. We're seeing inflation move a little bit lower. And we're even seeing the US dollar weaken. So historically, those three things are all great for equity markets as well. And then, the third point's a little bit more just of a pattern seasonality. But when we have a very strong first 3 quarters of the year, that historically just bodes well for the fourth quarter, which is seasonally the best quarter for the equity market. So we think there's nothing really standing in the way of the markets moving higher.
And any little red flags anywhere that you're just kind of keeping an eye on that could blow up or no?
Yeah, so obviously the U.S. jobs market does seem like it's slowing, so that is one source. We're hearing there's a little bit more stress amongst the subprime consumers and the lower income parts of the market. And so that's going to have some flow throughs into some pockets of the economy. But what we've really seen really since COVID, since 2020, is just the middle class and upper middle class seeing very strong spending, very strong wealth effect from higher stock markets, higher, relatively low unemployment. And then we've seen strong wage growth as well for that time period. So we think, there's lots of consumers feeling pretty good, and they're going to continue to spend.
Okay, and what about the U.S.-China tariff war that's going on right now? Rare earth minerals are at the center of it. Your thoughts on that?
Yeah, certainly. I think that caught a lot of market participants by surprise last week when President Trump announced these new tariffs coming for China. We've seen them try to walk it back a little bit. I think that's why we've seen the market mostly recover from that sell-off. And also the market was looking for a reason to sell off. It was almost straight up for 5-6 months. And even September, which historically a very weak period, we kind of just seem to continue to move higher right through that. So, again, we've seen this before. Negotiation tactics, clearly the two sides are still talking, and there is mutual dependence economically between the U.S. and China. So we're not overly concerned at this point. We think this is something that will be worked out in the coming weeks or months. But definitely, when the market is at these higher levels, it looks for reasons to sell off, and that was a good one.
And what does all this mean for rare earth stocks? So we saw a couple of them there. The numbers are up. I think I saw 22% out of the corner of my eye there. Yeah, Energy Fuels Inc. is up 22. Trilogy Metals 71%. Is this something that can continue, or is this just a response right now?
It's a small part of the market, so it's one that we think you're going to see a lot more capital probably chase, and we've seen in other sectors, particularly with how good market participants are feeling right now. Certain sectors can get pretty frothy and move even higher than maybe just a back of the napkin analysis would show. And we've seen that in quantum computing stocks and space stocks. So I think there are some investors out there that are going to look to chase this and hope for much higher prices. And this is a little bit out of our wheelhouse here. We're more long-term investors in some bigger, large cap companies, but certainly, I think we've seen the speculation in other sectors has paid off.
And with that, the bigger long-term and hold for long-term, how are you riding through this, and what are you looking at from your perspective for that?
Yeah, so we're still big believers in this AI megatrend. We think this is a very durable investment theme. And when I know there's a lot of analogies back to the 1990s, 2000s tech bubble, and we've certainly done our own internal debating and analysis, looking and comparing and contrasting that. But everything that we're reading and seeing is that, number one, demand for AI and AI products is still outstripping supply by a meaningful amount. And two, there are very tangible benefits that both consumers and companies are finding by integrating AI services. And so when you're in that market where demand is higher than supply and there's still excess value being created for the users of it, we think that still means that there's still early days and there's a long way to go for this type of trade.
And of course, the other one right now is the precious metals. Gold has jumped, silver as well. Is that a continuing trend, do you feel?
I mean, certainly, I think the recipe for higher gold prices is continuing. I mean, that plays back into what we talked about at the top with expansionary fiscal policy, inflation that isn't really moving away. It's come down, but it's still there, lurking in the background. And we have pressure for interest rates to come down and more and more government spending. So, I mean, certainly that is a good market for gold. And, we're seeing central banks continue to add to it. So certainly, I think gold prices could continue to move higher. I mean, we've been playing this mostly through some base metals with exposure. So we own shares of Hudbay, which has a gold production in Manitoba and some other of its as a byproduct at its mines. And also another company we like is called Major Drilling, and they're one of the largest gold mining drillers around the world. So as more and more companies cash up and get financing, that just leads to more opportunities for Major Drilling to put their rigs to work.
All right, talking about a different kind of mining, crypto has been taking a big hit in the last while. We heard some horror stories from people, their savings being wiped out in the last few days.
Well, yeah, so certainly, I mean, the crypto trade, has really rocketed the last 12 to 18 months. We've got the U.S. government now on side with this and pushing for change. I think I even saw that President Trump might be one of the larger holders of Bitcoin around the world. And I don't know if you want to necessarily bet against him while he's in office, at least as the most powerful person in the world. So, yeah, I mean, I think certainly, again, going back to the gold and what we're seeing, if crypto is going to trade in line with that and as more of a vehicle of speculation, it could continue to move higher. But I mean, always anybody who got wiped out in crypto on Friday last week, I mean, first off, there's considerable leverage that could have been employed. And that's something we always advise definitely our investors to try and stay away from as much as possible or use it very reasonably. And secondly, I mean, if you are going to play in this space, I think you want to stay with the big liquid crypto coins. Like I would rather own Bitcoin or Ethereum over some of the ones lower down the chain.
Okay. Jamie, thank you very much for joining us today.
Yeah, thanks for having me on.
Jamie Murray is the president of the Murray Wealth Group.